Hello and welcome to the My First Studio podcast, where we talk about the latest trends and topics in the world of technology, business, and innovation. I'm your host, Abong Joe, and today we're going to discuss the future of banking industry and how it is being transformed by the democratization of banking platforms. What is democratization of banking platforms, you may ask? Well, it is a term that refers to making banking services more accessible, affordable, and inclusive for everyone, regardless of their location, income, or credit history. It is a trend that is driven by changing customer expectations, emerging technologies, new business models, and increasing competition from non-bank players. Democratizing banking platforms can have many benefits for both customers and banks. For customers, it can mean having more choices, convenience, and control over their financial lives. They can access a wider range of products and services from different providers, such as budgeting tools, investment apps, alternative payment methods, or tailored financial products. They can also compare and switch between providers more easily, based on their preferences and needs. They can also manage their finances from a single platform without having to navigate multiple apps or websites. They can also decide which providers they want to share their data with and for what purpose. They can also access more accurate and comprehensive information about their financial situation and transactions and receive personalized advice and insights. They can also save money on loans, mortgages, overdrafts, or other financial products by getting more competitive rates and fees from different providers. They can also benefit from lower transaction costs by using direct bank-to-bank payments instead of cards or intermediaries. For banks, democratizing banking platforms can also have many benefits. They can expand their customer base by reaching out to new markets and segments that were previously underserved or unbanked. They can also attract more customers by offering more attractive products and services that meet their needs and expectations. They can also enhance their value proposition by providing a more personalized and holistic customer experience, as well as by offering more innovative and differentiated products and services that create value for their customers. They can also create new revenue streams by offering third-party products and services to their customers through APIs, or by providing their own products and services to third-party platforms. They can also increase their revenue by cross-selling or upselling their products and services to their existing customers. However, democratizing banking platforms also poses many challenges and risks for both customers and banks. Some of these challenges and risks include regulatory compliance. Banks and third-party providers must comply with various regulations and standards that govern data sharing, payment services, consumer protection, anti-money laundering, and cybersecurity. These regulations and standards may differ across jurisdictions, creating complexity and uncertainty for both parties. Cybersecurity. Banks and third-party providers must protect their platforms, systems, and data from cyber attacks such as hacking, phishing, malware, or ransomware. They also need to prevent unauthorized access, use, or disclosure of customer data or payment services. Data privacy. Banks and third-party providers must respect the privacy rights and preferences of their customers, as well as comply with relevant laws and regulations that govern data protection, such as the General Data Protection Regulation, GDPR, the California Consumer Privacy Act, CCPA, or the Personal Data Protection Act, PDPA. Customer trust. Banks and third-party providers must build and maintain trust with their customers by providing reliable, secure, and transparent products and services. They also need to deliver on their promises and expectations, as well as address any issues or concerns that may arise. So how can banks democratize their platforms? Well, there are several common ways they can do this. Here are some examples. Open banking and banking as a service, BaaS. Open banking is a banking practice that allows third-party financial service providers to access consumer banking, transaction, and other financial data from banks and non-bank financial institutions through the use of application programming interfaces, APIs. Open banking enables banks to offer a more personalized and comprehensive customer experience by providing third-party products and services to their customers through APIs. For example, BBVA Open Platform is a platform that allows customers to access products from other financial institutions through its app. Monzo is a digital bank that utilizes open banking APIs to offer features such as budgeting tools, savings pots, and bill splitting. Banking as a Service, BaaS, is a business model that enables banks to offer their core banking capabilities, such as accounts, payments, cards, or lending, to third-party platforms through APIs. BaaS allows banks to expand into new markets and segments by providing their own products and services to third-party platforms. For example, Solaris Bank is a banking-as-a-service (BaaS) platform that provides banking services to fintech startups or neobanks, such as Bitwala, Contest, or Tomorrow. Stripe is a BaaS platform that enables online businesses or platforms to accept payments, issue cards, or manage subscriptions. Cloud-based and modular platforms. Cloud-based and modular platforms are platforms that use cloud technology and microservices architecture to offer banking services. Cloud-based and modular platforms can enable banks to reduce costs, increase scalability, and improve agility by launching new products and services faster, as well as by adapting to changing customer needs and market conditions. For example, N26 is a digital bank that uses a cloud-based and modular platform to offer fast and flexible banking services, such as instant account opening, real-time notifications, or free ATM withdrawals. Mambu is a cloud-based and modular platform that enables banks or fintechs to create and run banking services, such as deposits, loans, cards, or transfers. Artificial intelligence, AI, and big data analytics. Artificial intelligence, AI, and big data analytics are technologies that use machine learning, natural language processing, computer vision, or other methods to analyze large amounts of data and generate insights, predictions, or recommendations. AI and big data analytics can enable banks to enhance customer insights, personalization, and engagement by offering more relevant and tailored products and services to their customers, as well as by improving customer loyalty and retention. For example, Bank of America Erica is an AI-powered virtual assistant that can provide financial guidance and advice to its customers, such as budgeting tips, spending trends, or saving goals. Zest AI is a platform that uses AI and big data analytics to help banks or lenders make better credit decisions, reduce risk, or increase profitability. Self-service and DIY tools. Self-service and DIY tools are tools that empower customers to manage their finances without the need for human intervention or assistance. Self-service and DIY tools can enable banks to provide more convenience and flexibility to their customers, as well as to reduce operational costs and inefficiencies. For example, Revolut is a digital bank that offers self-service and DIY tools for customers to create sub-accounts for different financial goals, such as budgeting, saving, or investing. Plaid is a platform that offers self-service and DIY tools for customers to connect their bank accounts to various fintech apps or platforms, such as Mint, Venmo, or Robinhood. That's all for today's episode of the My First Studio podcast. I hope you enjoyed it and learned something new. If you have any questions or feedback, please feel free to leave a comment below or contact us through our website. Thank you for listening and stay tuned for more episodes on the future of technology, business, and innovation. This is Abong Joe, signing off.